Thank you for joining us today in this Building Black Wealth virtual seminar. My name is Bishop Craig Worsham. I am the National Director of Faith-Based and Community Partnerships for the National Association of Real Estate Brokers. For over 70 years, the National Association of Real Estate Brokers has been on the front line of fighting for democracy in housing. And we are excited about this partnership between NAREB and the Full Gospel Baptist Church Fellowship International. Listen, whatever it is that you need in the area and the space of real estate, foreclosure prevention, loan modification, down payment assistance, credit repair, real estate investment, real estate development, classes on first-time home buyers. Let me tell you, we have what you need within our association, this African American Association of Real Estate Brokers in some 90+ chapters across this country stands readily available to serve you and meet your needs where you are. Let me ask you right now, text Black Wealth to area code 866-521-0625. Let's connect today and let's help you get to the place where God wants you to be in the area of black wealth. Well, today we're going to bring a presentation to you dealing with special information, needed information for those of you who desire to become a first-time homeowner, or you know individuals who desire to move into that space of becoming a first-time homeowner. Our presentation today will be led by Val Robinson, who is the mortgage loan originator at Fifth Third Bank.
Hello, my name is Val Robinson. I am a mortgage loan originator with Fifth Third Bank. I have worked here at Fifth Third for almost 17 years, and I love helping people purchase homes and educate them in home ownership. I would like to thank President-elect Lydia Pope and her leadership team and all of the partnering organizations for this opportunity to provide this important information on how to obtain financing for purchasing a home. We here at Fifth Third are able to do mortgages nationwide, and we're able to help people in different states and cities. So, you don't have to just live here in Ohio. You can live anywhere, and we can see if we can help you. Fifth Third aligns with NAREB's mission to increase Black home ownership, to build wealth, and advocate for democracy in housing. I want to thank you for taking this time out to invest in yourself, to invest in your community, to invest in your community, your children, your legacy, to take this time and learn about home ownership. So let's get started purchasing that first home. So we're going to just start today with basically getting started with just, what the things are and everything to do with home ownership. So what we're going to talk about today are owning your home. Is owning right for you? Is this something that you really need to be doing right now? We'll look at comparisons for owning and renting. We'll talk about the do's and don'ts of buying your first home, what to expect from the lender, and steps to get started today. A lot of people have bought homes in the past, but I like to let customers know now that a lot has changed in the mortgage industry. We do ask for a lot more information. So what I like to do is just make sure that I'm getting you that information that you need so that we make the process a lot easier for you. We're going to look at the advantages of owning a home. So what we're going to talk about first is an opportunity to build equity. So you say to yourself, what is equity? Equity basically is the appraised value of the home minus any mortgages or liens on the property. So if you have a home equity line or any type of mortgage, the difference between that and the value of the house is equity. So I usually use an example. If the home is appraised at $200,000 and you have a mortgage for $100,000, that means you have equity for at least $100,000. So that's a great advantage of owning a home. And that basically that equity is the money that you can get out once you sell your home, again, minus any liens or any fees or anything to do with the home. Also, you will be gaining a sense of community. So basically, where you live is where you're going to value. So if you're in a community where you work, or even where your children go to school or something like that, you're going to gain that sense of love and community with your neighbors. You're going to get involved with things that are going on. So that's another advantage. You also get to decorate and landscape to how you want to do it. So a lot of times people like to get into the home and start painting or taking out things and upgrading things. So that's a great, great advantage of owning a home. You get to go and make it your own. And if you want to make it your own on the outside, I also tell people, if you live in a community with homeowners association, you want to make sure you look at those bylaws and anything to go with your homeowners association and make sure that you're within the guidelines of that homeowners. You don't want to put flags or things out there and they don't allow that. You don't have to depend on a landlord for repairs or maintenance. So basically you're responsible for anything that gets broken, or if you want to change anything, that is up to you. Also, you can receive maybe some type of tax benefit. We always let our customers know that you want to talk to a tax advisor and make sure if you're able to do any type of things with the taxes. So that's another advantage of owning a home. Some disadvantages, basically, you can look at it as a disadvantage. You're responsible for the maintenance. So, if something does break down, that means it has to come straight out of your pocket at that moment. Property taxes, which we know if the taxes go up, if there are levies that are passed or something like that, those are going to be increased. So that's going to allow for your payments to be increased. So you are responsible for those property taxes and insurance for the home. So if you have any type of claims or anything on the home, just realize that may affect your insurance. If you are basically at a job that moves quite a bit, you'll have less mobility when you own a home. So you'll have to think about selling your house before you move. But then we look at advantages of renting. There's little or no responsibility for maintenance. So you can call your landlord or call that company that handles that property, and they usually can fix anything that's going on in the home. An advantage to renting, it's easier and quicker to relocate. So, if you know that you're going to be retiring in a few years and you want to move closer to family, maybe you don't want to own it first. You want to rent. And then once you get to where you're going to be stable, then you may want to own a home. The disadvantages of renting, basically, there are no tax benefits. You may have other things that you may be able to look at, but you want to talk to your tax advisor for that. You're not gaining any equity, and you don't have any control over the rent increases. So if you're on a month-to-month lease, a 6-month lease, a year lease, that landlord has the option to increase your rent. So that is something that you want to think about also that may be a disadvantage to renting. So we have a comparison here between owning and renting. This is a 7-year scenario with a sales price of $165,000 with 5% down. So if we're looking at the option of renting, we have the amount of rents that you would pay over that 7 years would be $117,756. And this is an estimated rent payment of about $1,400 a month. You're going to have homeowners insurance because you usually have to have some type of renter's insurance, which would be approximately $2,500. So when you add those together, the total payments that you would have would be about $120,276. But then when we look at the comparison, if you own a home, you're going to have mortgage payments of approximately $66,000. And that's over that 7-year period. Of course, you'll have your taxes that you need to pay and your homeowner's insurance. Because we're only putting 5% down, you probably have what's called mortgage insurance, and then any type of maintenance. So if we're looking at the number of payments when you purchase a home, that's $112,833. which is total payments after the tax savings of $96,000. So when we look down at the bottom where it says savings summary, when you look at the payments that you had for renting and also with owning, the savings when you own are about $7,443 in payments. Again, the tax savings approximately would be about $16,000. And then the appreciation that you would get from owning the home over those 7 years, about $63,000. Depending on what's going on in the market, like right now, sellers are getting a lot for the houses that they're purchasing and selling right now. So it's a great market for selling. I also say for buying also, but that appreciation is big. So that's where you're getting a lot of savings. It gives you a scenario after you sell the house, there may be some expenses, down payment, things like that. So over the 7 years, you approximately could save $68,000 in a 7-year period by owning a home. That is big. So it just shows you where you can build that equity, and that's money in your pocket that you can save, which is awesome. So we're going to go over now the dues of buying your first home. This is extremely, extremely important. The first thing you definitely want to do is be pre-qualified for the mortgage. I always let my customers know that a realtor usually won't take you out to start looking unless they know that you have been pre-qualified. They want to make sure that you are serious about shopping to purchase a home. They want to make sure that you sat down with someone, talked about your finances, that you know how much you really can afford. You don't want to go out looking for a house at $500,000 and you really only qualify for $300,000. You don't want to be disappointed. So we like to sit down with our customers. That's when we sit down and ask all of those questions. I let people know I'm going to ask you a lot of questions. These days, we need to know, what type of accounts that you have, what deposits are going into your account, what is your marital status, do you pay child support, do you get alimony, all those type of things are questions that we're going to ask. So I tell people, don't be ashamed, just let us know, tell us everything up front. We're going to find out when it gets down to it. You want to in the range that you qualify for. And the realtors want to know, hey, I got a great buyer here. They're serious and they're ready to purchase a house. Be realistic about the needs and wants. Think about how long you're going to stay in this property. Look at your life. If you're married, if you have kids, okay, how much longer do the kids have in school? Are you going to stay in that school district until they graduate? Will someone be getting transferred with a job? Sometimes you don't know for sure, but that is something that you want to think about. So if you feel like you're going to be staying in the area, the next couple of years, up to 5 years, hey, I think that's great. You probably do want to go on and purchase a home. If you know that there could be a job change, or like I said earlier, you're thinking about retiring in a couple of years and you want to move closer to family, maybe you want to wait till you get to that next city or state and purchase a house then. You want to consider the school district. What type of school district are you looking for your children? Are they in high school? Are they in elementary school? Are they in a private school? Does it even matter where you are, or are you homeschooling? So this is something that you want to make sure. How far are you going to be from the school? Are you going to have to take them to work? Actually take them to the school? Will they be able to ride the bus, stuff like that? So you want to just make sure where the school district is, or how far is it from your job? Do you want to be in a community that has a lot of shopping? Or do you want to be in an area where there's a lot of land and that's what you like? So you just want to be realistic with what your needs and wants are. And those are the type of things that you want to communicate with your real estate agent. You want to make sure that you let them know, hey, if you want a garage or you don't want a garage, do you want a pool? Those type of things. How many bedrooms do you want? Those type of things are very important when the realtors are looking. A lot of times now, of course, people can go online and look at houses. So you can see a lot of the things that you want to now online, but you want to be upfront and honest with your realtor. The dues of buying your first home. So a lot of people come to me and they're like, I'm so excited. I'm a first-time home buyer, and I love working with first-time home buyers. They're so excited. They are wanting to, get all into it. So what we want to do first is shop for a loan. Not all mortgages are created equal. So that's when we start asking the questions. How much money do you have to put down? Are you going to get gift funds from a relative? Are you going to get money from a 401k? Where's the money coming from? What type of credit scores do you have? If you know, some people don't know, or some people do. So we need to make sure that we put you in the correct loan program that is going to be sufficient for you to get that mortgage. There are so many programs out there for customers. So we have loans that are rural development loans. We have first-time homebuyer programs. We have conventional loans or Fannie Freddie loans that are 3% down, 5% down. We have FHA loans, government loans, which are 3.5% down minimum. Then we have loans for veterans, which are VA loans. I love doing loans for veterans. That's just a great, great thing to do. To do a loan for someone that served our country. So that is wonderful. So you want to also search for competitive rates. Basically, you do want to call around and see who has the best rate. I like to let customers know rates are determined by loan to value and also by credit score, and also what type of home you're purchasing. So if it's a primary residence, it's going to be a certain rate. If it's a second home, or if it's investment property. All three of those options have different rates, down payment criteria, and also different things that we need for the process. So we will ask, is this your primary residence? A primary residence means that you're going to be living in the home. That's where you and your family will be living. Investment property is a property that you will be renting. That can be, next door, or it could be in another state. A second home usually is, within 50 miles. You may stay there 6 months out the year or something like that. So those are the three options that we usually have when we're, trying to see what is the best option for the customer. We want to make sure that your finances are in order. One of the first things that I like to do is to give my customers a list of items that they will not need to start getting together. So I ask them, are you self-employed? Do you get bonus? Are you commissioned? That lets me know what type of documents I need to ask the customer to start getting together. So I let customers know, hey, we're going to need your last 2 years' tax returns. When we ask for tax returns, they are not just the first 2 pages. The tax returns are the full package with all schedules. That means Schedule C, Schedule E. That means your K-1s. That also means your W-2s. So when we ask for your tax returns, we need the full packet. And usually we just need the federal, like your 1040s. So we usually don't need your city or state tax returns, but just the federal. Your bank statements, big. When we ask for your bank statements, we're going to need every page of the bank statement. So if it says pages 1 through 4, we need every page. If that 4th page says this page is left blank intentionally, we still need that page because that is part of that bank statement. When we get those bank statements, what we're going to be looking for are large deposits. So they're going to be deposits that may be approximately 50% more than your income per month. So if you make $5,000 a month and you have a deposit for $3,000 or $4,000, we're going to want to know where that money came from. If it's not like a direct deposit from payroll, Social Security, something like that. A lot of times we start looking at those statements and we just, say, hey, go to your bank, ask them to print the copy of the check and the deposit slip so we know exactly where that's coming from. We do have to know, we have to make sure those funds are, we have a paper trail. Another important thing that we're going to be looking at is your credit report. I know a lot of people can go out and pull your credit from different agencies. The banks are going to pull their own credit report. They're usually good for pre-approvals, approximately 90 days. So if you haven't found a house within that time, a lot of times we have to re-pull the credit. There could be things that have changed. We're going to be looking at what type of inquiries are on your credit report. Inquiries are people that have pulled your credit. So I suggest to customers, don't go from bank to bank and asking everybody to pull your credit. Pick one in the beginning so you have an idea what your credit scores are. If you're not ready at that time, just wait. We are going to look at late payments. Are there any bankruptcy on the credit report? Are there any foreclosures? Is there another mortgage? That's kind of when you can see if there are things on the credit that you didn't know about, any collections, things like that, any liens. So that's when we start asking a lot of questions. Then you're going to get follow-up tips to get your finances ready. So that's when I'll say maybe, we need to kind of see what's going on with the credit. There may be things on there that is not yours, and you may want to get that taken care of. That's when we're going to also sit down and learn about the home buying programs, which I talked about a little bit earlier. So we were going to learn about home buying programs. Each state or, city may have some programs that are specific to where you live. We have different communities here. They may have, I know here in Cincinnati, they have some programs in Cincinnati that are specific. I'm sure wherever you are, there are programs that you can do for first-time home buyers. Some banks have programs that are specific to that bank. We at Fifth Third have what's called a Fifth Third grant that we are able to help customers with their down payment. So it can be used on conventional loans or FHA loans, just depending on the product. And with this program, we can help you with almost $3,600 towards your down payment. There are income limits and also where the property is. So it does need to be in a low or moderate census tract. So we go over that type of stuff with you. You want to go over that with your mortgage loan originator, and just to see that, you make sure if you want to use those type of programs that you are finding the house in that market. If there's, for some reason, you need to do some type of counseling programs, a lot of times there's some type of first-time homebuyer program that customers have to take to get the first-time homebuyer money. So we go over that then so that you can go on and get your certificate and you have that ready. So usually when I meet with the customer in the beginning, I'm letting them know, hey, you can go to Federal Home Loan or different places and go on and start your class. We want to make sure that you are ready for your first-time home buyer. We want you to also use a real estate agent. So you want to ask your family and friends for referrals, who you may have used before, talk to a friend at work, but you definitely want to have a professional helping you with purchasing the home. You want to get someone that has experience, commitment, and, that's, doing this and been doing this for a while. You want a real estate agent that knows the market inside and out and will help you navigate your local market. So we want to make sure that they know the area that you're going to be looking for a home. So you don't want somebody in another state or anything like that helping you purchase a home where you are unless they're licensed there. You want them to be familiar with the area that you're going to be looking. You want them to represent your best interests and have access to listings, schedules, showings, and stuff like that, that you want them working for you. That is what their job is, and they are wanting to do that. They want to make you happy. They want to help you find a house. So you want to make sure you find a real estate agent. You can, if you want, talk to several agents if that's what you feel like you want to do, just to see the ones you work well with. So I always tell customers, a lot of them come to me already with an agent. If not, we refer them someone that they can definitely work with. The dues of buying your first home. So this is some things that you're going to do once you find a house. This is where you're going to, start getting in the nitty gritty. You're going to hire a home inspector. So once you find a house and the realtor basically states, hey, your offer got accepted. One of the first things you want to do is get a home inspection to make sure the house is sound. So this is just going to protect yourself from any type of unexpected problems. You don't want to purchase a house and then everything starts falling apart. So you get a home inspector. They're going to come out. That process can be several hours. They're going to look at everything in the house. They're going to look in the kitchen, run the water, run the dishwasher, flush the toilets, look at the roof, all that type of stuff. And then they're going to give you a report. And then a lot of times they'll go over it with you. There is a fee for the home inspector. So you want to make sure that you, make sure you have the funds for that. Those ranges, it can be between $400, $600, just depending on where you are in the market. Hiring your own inspector ensures your best interests are maintained. You want to make sure that you get a home inspection. Consider hiring a real estate attorney. Most of the time when we're doing mortgages, you are going to have a title company or real estate attorney to close the loan. Depending on what market or what state you're in, it will be an attorney or it can be a title company. They're going to make sure that there are no liens or anything that shouldn't be on the title work. So they're going to make sure this house is going to be able for you to move in without any issues in the future. It's just a second line of defense to ensure your best interests are maintained. What I like to tell people, we are all here to make sure you are going to be taken care of. You want to make sure that the buyer is, calm. We want to make sure that you're excited and not to be stressing during the process. For an attorney or for a title company, you can talk to your friends, family, your real estate agent, or even the mortgage loan originator to help you with that process. Also, we like to let our customers know you may want to request a seller paid home warranty. So that is basically a warranty that's going to help anything that or cover any type of things that didn't get maybe missed or something during the process, like the key appliances or home systems or something like that. So if something breaks down after you move into the house, within that first couple months, you can call and get that home warranty, and it may be just a small fee to get them to come out and replace it or fix it. Usually those home warranties are just about a year. So after that first year, you can renew that at your own expense. So usually we do see that almost all people are getting a paid home warranty. There are a lot of things that we do look at that you don't want to do when you're purchasing your new first home. Don't rush. Take your time finding that perfect home. My best thing is what I always tell people: buying a house is not like buying a pair of pants. You can't take it back. So you want to take your time, make sure this is where you want to be, make sure it's what you really want. It's not anything you have to do right away. Don't let anybody force you to do anything. Find the house that you really, really want. Don't negotiate contracts without your real estate agent. Don't go trying to do things that you don't really know about. That's why they're there. We need professionals. And that is why we have the real estate agents there to help us. Don't buy more than you can afford to pay on your current salary. We will, look at your debt to income. We're going to talk about that in a few. Don't buy more than you can afford. I always tell people, you really know what you're going to spend every month. I don't know how much you eat out. I don't know how much you like to shop. Do you have a hobby that you need to make sure you have a budget for that? So you want to make sure that you get in a house that you feel comfortable with. We always say you don't want to be house poor. So, we want to make sure that your salary is sufficient with that amount that you're purchasing. Don't underestimate the power of competing buyers. So, there are a lot of people out there right now that are looking for houses in this market right now. A house goes on the market right now, there are 15 probably buyers. So you want to just make sure that you have the best offer out there. This is the key one. I always tell people, don't be afraid to ask questions. No question is a dumb question. Always ask questions. You want to make sure that you understand this is a lifetime event. This is something big. You're buying a house. It's awesome. So no question is stupid. Always ask the question. Don't feel pressured to make a decision if you're not comfortable. Do not do that, because once you sign those papers and you say you want to pay that mortgage, I'm telling you that payment's going to be there and you're going to have to pay it. Don't open any additional credit accounts. That means I've had people, when I first started as a loan officer, I'll never forget, a guy bought a boat and I was like, no, please tell me you didn't. So I always tell customers, don't go buying anything right now. If you want to buy your car, you wait, let's buy the house first. Don't go open new credit cards with the car. Don't go buying the furniture yet. Let's get the house done. And once that's done, then you can go and basically get the furniture, other things like that. We don't want to have any new inquiries. We don't want your credit scores changing or anything like that. That type of stuff will affect the mortgage. So don't go buying anything. I always tell customers, don't move money around. Either don't move from this account to this account, or leave the money there. Let's do all of this first, and then we will go, to the next, go do all the other stuff. So what you're going to expect from your lender. So The debt to income ratios, what we usually say DTI, this is big. It is the ratio that measures how much of your gross income you're using to cover all of your debts, including your mortgage, auto loan, credit card, student loans, utilities, and things like that. So basically, your debt to income is what shows up on a credit report. It does include if you pay alimony, if you have to pay child support, things like that. So student loans are big. I always try to make sure I talk to customers about student loans. Right now, a lot of people are on deferments for their student loans that are not making payments. We still have to take into consideration your student loan payments. So we are going to take maybe a 0.5% of that balance or 1%, depending on what program we're looking at. If there is no payment on there, if you can't get us proof of what that payment is, we're going to take a percentage of that balance of that student loan and use that as your payment. So we will still use it even if it's in deferment. It just depends on the program, but I always let customers know student loans are big. We will count a payment unless you have a zero payment for income based and stuff like that. So we go into more detail with that. There are acceptable debt to income ratios. They vary from bank to bank. They vary from program to program, but you have what's called a total debt to income, and then you just have a housing debt to income ratio. So they can be between 28 and 40% of your income. So as we look at this example, we have your gross monthly income, and that's what we use before anything's taken out, is $5,000. And if we do that times 28% or between that and 40%, this gives you a range of where we feel like your debt to income needs to be with your debts and everything. So your total debt may not need to be over $2,000. So we go over those numbers. We can sometimes go over 40%. I let people know it may be closer to 45% these days. So we just run it through our automated system. If it's not a manual type of loan, and we see where we can get you. Don't get discouraged if you're a little bit over 40. We probably can have a program for you. These are the type of things that you want to expect from your lender. Of course, there's going to be costs that go along with purchasing a home. So we have what's called tax escrow and prorations. So usually when a customer purchases a home, they're going to have to get homeowners insurance, and you're also going to have property taxes for that home. So we're going to have to take a portion of the property taxes that are collected at closing and deposit that into an escrow account. And that's what we call it. It's just like a holding account that the bank puts the taxes and insurance so that when it's time to pay those bills, the county for that house will send the bill to us here at Fifth Third, and then we'll send the check to them. We take out in your mortgage payment the monthly amount that we need in your escrow account to pay the taxes and the insurance. And that's what we put in the escrow account. If you have mortgage insurance is insurance that protects the bank on default. So a lot of people don't have 20% to put down. We go all the way up to 95, 97% loan to value. So we have what's called mortgage insurance, or PMI. And that is just insurance to cover if the loans are defaulted on. So that's also, in that escrow money and stuff like that we're taking out monthly in your payments. We kind of, you will see that when you go to closing, you'll see the amount that we're taking. Those are big, big numbers that we want to make sure that you know what those numbers are for the taxes and the insurance. Depending where you are for insurance, you may need flood insurance, or you may only need homeowners insurance for the property. Usually when we close on a loan, you have to pay the first full year of insurance at closing. So if that annual premium is $900 a year, that amount will be taken at closing in the fees for closing. And then we're going to take a percentage of that, usually about 2 to 3 months of reserves for the the escrows. There are processing fees, title fees, underwriting fees that are going to take and be on your closing disclosure. So there are a lot of fees that you will see. Ask your loan officer to explain them. If you don't understand what they are, ask the questions. Do not be afraid to ask the question. Most banks now ask for an application fee. A lot of times they are non-refundable. So those are fees that just, we take in the beginning for, your application in to pull credit, things like that. So every bank is different on that fee, but be prepared to have an application fee. Usually it's in the, $400 range, something like that, depending on the bank. So you want to make sure you have that funds. And then we also talked about the inspection fee. So those are two things already you want to make sure you have up front. Appraisal fee. Appraisals are big. We want to make sure that the house appraises for what it needs to appraise for. So an appraisal basically is the property's fair market value. So there are going to be appraisal fees. Some banks take it up front, some just do it during the process. So it just depends on the lender who you're dealing with. Then you're going to have what's called earnest money. These are the funds paid to the seller once the contract is signed. So this is another fee you want to make sure you have up front. Basically, it just depends on your market. It could be $500, it could be $1,000, it could be way more than that. But this is money that you're going to give to the seller to say, hey, I'm serious. This is the house that I want. And usually the earnest money is used to help towards your down payment that is credited to you at closing. So that money will be credited to you. It's not like you're giving it to it and you won't see it again. So that just lets that seller know, hey, they're serious. And that's where they want to see that. Mortgage programs. So I talked about this a little bit a few minutes ago. So right now, a lot of times we're doing what's called fixed rate loans. This is where the principal and interest rate are locked for the term of the loan. Usually when I talk to a customer, I'm asking them, are you interested in a 30-year, 15 or 20-year, 10-year fixed rate? So when we look at that, you have several parts of your payment. So you have what's called the principal and interest part. You have your escrows, mortgage insurance, things like that. So when you have a fixed rate, that principal and interest payment will never change during the life of the loan. So if you're doing a 30-year mortgage, your principal and interest payment part is going to be the same. Now, if we go to what the next one is, which we're talking about an ARM, which is an adjustable rate mortgage, this is where the fixed payment and interest rate during the early years of your mortgage payment are fixed. But after that initial period, it will change usually every year after that. So you may have what's called a 3-1 ARM or a 5-1 ARM or a 7-1 ARM. So it will be fixed for 3 years, 5 years, or 7 years. After that, that rate can change every year after that. So some people do that if they know they're going to be in the area for a couple of years, or sometimes the ARM rates are a little bit lower than the fixed rates. You see what's best for you. That's why we sit down and we talk to you and see what option is best for you as a customer. Federal Housing Administration, you usually just hear that as an FHA loan. We have that, we usually say it's a government loan. Benefits to these, you can purchase this one with little amount down. Usually it's 3.5% down. Maybe people who are just recently graduating, newlyweds, but FHA is for anyone. It can be for someone that, may have just filed bankruptcy in the last couple of years. You can probably do an FHA loan or, foreclosure or something. So this is an option where if you may have had some issues, we may be able to help you on an FHA loan. I don't say it's just for people that have issues. An FHA loan is for anyone. You may just have that minimum amount to put down. So we go FHA. If not, you might be a veteran and we can do a VA loan. The wonderful thing about a VA loan, it's 100% financing and there's no mortgage insurance. These are great, great loans. So I always give my veterans, hey, find your DD 214. Do you have your certificate for when you got out of the military? So there's a lot of paperwork with the VA loans, but it is beneficial if you're a veteran. 100% financing. So that's great. I love to see people get into a new home. So we do have, conventional loans and things like that. We have a lot of programs now that you still may only have to put 3% down, and it's just a Fannie Freddie product, conforming product. So we have a lot of products. Let's get started today with your finances. So what do we need to do to get your finances in order? We are going to please make sure you pay your bills on time. This is one of the best things you can ever do. I always tell my girls, I have 2 daughters, and I just say, you know what, make sure you're paying your bills on time. Don't not miss a payment. Please check, make sure you're paying your cell phone bills, doing everything. pay everything, because sometimes these companies will just throw it on your credit as a collection, and then you got to try to get it fixed. So, pay your bills on time, check your mail, look at your emails, make sure your bills are paid on time. Sometimes I see people where they had a small $25 payment that they were late on, and that can affect your credit score drastically. Inspect your credit report. There are different ways that you can, access your credit report. A lot of banks have, ways where you can get your credit report and monitor it on a regular basis. Do not make purchases on credit after submitting your mortgage loan application. Impact your debt to income ratio and your credit score. So that is big. I know I said it earlier, but it is very important. Don't go buying anything and opening up new credit until you've finished purchasing your home. Save for your down payment. I mean, the first thing we as loan officers are going to ask, where's your down payment coming from? There are different options where to do and get your down payment. You can save for it, which is awesome, and that's in your checking and savings account. There are programs where you can get gift funds from a relative. So I tell customers that, maybe your mom, dad, grandmother, they've been saving and you don't even know, and they want to bless you and help you with your down payment. That is awesome. So that is a way for you to get your down payment. There may be, different ways you can do with your 401ks or with, different things. So just ask the loan officer, are there other options that I may have? And then there may be grants or in the community that you can get for your down payment. Again, we want to start gathering the documentation, gathering your tax returns. Again, as I said earlier, we're going to want your last 2 years' tax returns. And that is, again, with the W-2s and with the schedules. So that is a part of your tax return. Again, you're going to start collecting your bank statements. Prepare to share good account management with the last 6 to 12 months checking and savings accounts. We are going, you can send us your savings, your investment accounts, IRAs, 401k statements. When you send those, again, send all the pages. We need page 1 of 12, 1 of 5, whatever. Send all the pages. And that just helps us out tremendously. If you need to take a home buyer education course, that can help you get a better understanding of budgeting, your credit, the process of home buying, what you need to expect, what type of organizations are out there. I always tell people, go to your realtor. They may be able to give you some places where to go. Your loan officers will have places for you to go to get your home buyer education. That is big. Getting started. How much can you basically afford? You want to talk to your mortgage loan originator about, how home fits within your budget. I always tell people, what are you spending? What are you going to be looking at? What do you feel comfortable with paying a mortgage payment every month? How much you've been paying in rent. Is that sufficient? Or do you feel like you can go a little bit higher? I will do it manually, for a customer where I'll write down everything they have. We can go over those numbers and just see how they feel with this type of payment. I tell people when you purchase a home, you have to start thinking, I got to start paying for everything. If the taxes or the insurance go up, that's my responsibility. If the water heater breaks or if the air conditioner goes out, that's my responsibility to start paying for that. So you want to make sure you have that money in reserves or somewhere where you can get to fix the repairs. How much, do you go out and eat? Those type of things. Those are the things you definitely want to make sure that you're taking into consideration when you're looking at purchasing a home. Step 3, getting pre-qualified and starting the mortgage process with Fifth Third. So as your loan originator, we want to walk you through the steps. And again, you will need a sales contract. Basically, this is what you and your realtor will sit down and go over. They may be several pages. It's going to have the address, the sales price, the earnest money amount, all of those things on there. If the seller's paying anything toward closing costs, all of that is going to be on the sales contract. It's going to let me know who the buyer is, who the seller is. They're going to have the real estate agent's information, their property address, a lot of things on there. That's what we use. And that's when we know that you are ready to move forward. We're going to need social security numbers for all applicants. Anyone that's on the mortgage, we're going to need their social security numbers. We're going to need their driver's license or state ID for all applicants. We need to know that you are the person who you say you are. We need your legal name, not the name that people call you by, but we need to put that your full name, your legal name. Like my name is Ravala, but everybody calls me Val. But when I fill out everything, I use Ravala. Employment information. We need the last 2-year work history is important. So if you've changed jobs within the last 2 years, we're going to need that information. We're going to need the address for that company, phone number, and what you made when you were working at that employer. So those are the type of things that I like to tell customers up front, keep that information, have the phone numbers, because we are going to verify that you are still working and that you did work there and that income is still moving forward. Copy of your last 2 years W-2s or tax returns if you're self-employed. So we are going to request your W-2s. If you worked more than one place, we're going to need the W-2s for all the places you worked in the last 2 years. If you are self-employed, we're going to get your tax returns. If you're a 1099 employee, we're going to need your 1099s for the last 2 years. Another thing that we started requiring now are called profit and loss statements for all self-employed borrowers. We will require that now. And your tax returns need to be signed and dated. We are making sure that those are your tax returns so we get your signature and the date that you're applying for the loan. So we're going to get the most recent pay stubs. Those need to be employee generated. They don't need to be just somebody writing something up on a pay stub. Your pay stubs need to be employer generated. So they need to have your name, the name of the company, the address, all of the deductions, things like that. That's what we'll see sometimes if you have child support or what type of things are coming out of your check. And the underwriters are going to ask questions. So if they see things on those pay stubs that we don't know about, they're going to ask questions. So I always let people know, if you know you're going to be in the market, start keeping your pay stubs. If you got to print them out, because most people don't get them now through mail or anything, they're all generated online. Start getting your pay stubs and print those out. Complete information on all open debts and other obligations, account numbers, balances. A lot of times we see everything on the credit report, but maybe there are some debts that don't show in the credit report, like child support. So we have to see your divorce decree or the child support papers, because we need to see when that's going to end or start, depending on if you're getting it or paying it. So we're going to ask for account numbers. If we see bank statements and the account numbers are not the full account numbers on the statement, we will ask for you just to let us know what the full account number is. And that is on the bank statements now. I think they're just protecting and truncating those for the customers. So that's why we ask for those full account numbers. We have to put that in our systems. Again, complete information on assets. We are going to look at what your current balances are. If you have large deposits, again, we are going to ask where that money came from. You do not need to deposit cash. You need to make sure that these deposits are where we can do a paper trail. So again, if you are getting some funds from your mom and it was your birthday, if she's going to give you that, tell her to say birthday at the bottom or something like that. And we can verify that it came from your mom or dad or whoever. A lot of times when they're giving you gift funds, that parent or whoever it is going to have to fill out what's called a gift letter. And they're going to have to sign that stating that that is a gift and you don't have to pay it back. That is big. So we may ask for their bank statements also, just to make sure it did really come from them. We want to make sure we have a paper trail. We want to make sure those funds are coming from where it needs to come from. And we are going to ask for your last 2 months bank statements. So again, all pages of the bank statements. If for some reason we need to ask for a statement longer than that, because sometimes you may co-sign with a daughter or a son and they actually make the payment out of their own account. Hey, we may be able to cancel that payment and not count it against you if we can get 12 months bank statements from that daughter or son. So, we may ask sometimes for a statement that's longer than 2 months. So you're going to get started today. We want to get started with you getting ready to purchase your home, pick a house, start getting those boxes together and everything like that. Now, a lot of people have what's called frequently asked questions. You know, they may have questions about what is amortization. In a process called amortization, it's just your debt is reduced over the term of your loan. With amortization, your monthly payment covers the interest that has accrued over your loan and included in the amount towards your repayment of the principal. As your loan balance decreases, the interest portion of your payment decreases and the principal repayment increases. So we give what's called an amortization schedule. And you're going to get that once you get your paperwork at closing. And you can see through the whole 30 years, every payment, 360 payments. When you make a payment, it's going to show what went toward principal, what went toward interest, and if you have mortgage insurance, and then you can scratch it off or whatever when you're making those payments. So I love to let people see, you know, their amortization schedules. And if you make additional payments toward the principal, hey, you can, you know, look at it and see how much you paid, and you don't have to pay the full 30 years. So most banks now don't have what's called any prepayment penalties or anything like that. So I'd let customers know here at Fifth Third, you can pay as much toward the principal. You want to maybe aggressive and paying that house off. You have a goal to retire in 10 years and you want that mortgage paid off in 10 years. Hey, we can help you to tell you how much you need to pay extra to get it paid off. That might be your goal. So we are here to help you with that. Again, how do I know how much I can afford? That's what we're going to go over with you. Be upfront with the customer. Be upfront with us as loan officers. If you know you're paying child support, we're going to find out. If you know there's something behind the scenes that we really need to know, just tell us up front. It's the best way to do it. How much will I know I need for down payment? We're going to go over that with you once we start talking about the different mortgage programs. Do I need 10%? Do I need 20%? Do I need 5%? Again, FHA is only 3.5%. Will I be able to qualify for a grant that, you know, maybe you only bring in closing costs? So those are the type of things that we're going to go over with you. So again, how do I begin? You've already taken the first step because you're attending this workshop and you're listening and, you know, talking to us right now. And that's how we're going to get started. Again, the comparison that we talked about on page 3 is just, you know, basically this was just the information with that. And if you have any questions, what we're going to do basically is, you know, you can get in touch with me. My work number is 513-398-3205, and that's my office line. And my email address is val.robinson@53.com. That's val.robinson@53.com. I tell people all the time, purchasing a home is one of the biggest things you're going to do. It is so rewarding. I've helped an 80-year-old woman purchase a home that she never thought she would purchase a home. And when I tell you it was awesome, she was so happy. And she was like one of the first people in her family to purchase a home. That is the most rewarding part of my job, is to see people purchase a home that never thought they could, or see a person just graduating from college and we're able to help them with grant money. It is wonderful. Or it could be a person that this is their 5th home, but it's that home that they have desired for many, many years. And they are so excited to do that. So I am here to help you if you have any questions. I am always here. If you just want to throw something at me, I will be glad to help you with that. So if you have any more questions, feel free to reach out to me. Thank you.